This two-part video series introduces the basics of rating insurance and reinsurance companies. In this first video, we will provide an overview of Fitch's rating process and the assignment of Insurer Financial Strength ratings. The second video will cover the assignment of issuer default ratings and ratings to different classes of debt obligations issued by insurers. Fitch Ratings insurance rating criteria apply to both insurance and reinsurance companies. Whilst the criteria apply to all regions or markets, as well as to all types of insurers and reinsurers, the criteria report describes financial ratio definitions that may apply to a specific subsector, region, or country. The complete document can be found on fitchratings.com. Fitch's criteria for insurance-linked securities, or cat bonds, are not covered by this video series. Insurer Financial Strength, or IFS ratings, reflect both the ability of the insurer to meet policyholders' obligations on a timely basis and expected recoveries received by claimants in case the insurer stops meeting these obligations. When looking for insurance, potential policyholders may want to buy protection from financially strong companies reflected in the IFS rating. Brokers use IFS ratings to make sure recommended insurers have the ability to pay should a covered event occur. Underwriters at reinsurance companies may also use IFS ratings as part of pricing reinsurance contracts with these insurers. The IFS rating applies to foreign and local currency policyholder obligations and is capped by the country ceiling if transfer and convertibility risk is material. The issuer default rating, or IDR, reflects an insurer's vulnerability to default. The IDR is derived or notched from an applicable IFS rating. By removing the impact of recoveries from the IFS in the event the insurer defaults, it can be evaluated at the operating entity level or the holding company level. Debt and hybrid ratings are derived from the IDR. For both debt and hybrid securities, the rating relative to the IDR of the issuing entity is based on the security's recovery assumptions in the event of default. Additionally, for hybrids, there may be extra notching due to the risk of the hybrid non-performing, deferring, or canceling interest prior to default. IFS ratings reflect both the ability of the insurer to meet policyholders' obligations on a timely basis and expected recoveries received by claimants in case the insurer stops meeting these obligations. IFS ratings are the primary outcome of Fitch's fundamental credit analysis, which is driven by a review of the key rating drivers, or KRDs. These include company profile, capitalization and leverage, financial performance, and earnings. Other criteria elements impacting the IFS are ownership and group membership. In case an operating entity is part of a larger insurance group, the IFS can also be impacted by the willingness and the ability of the group to provide support to the group member. The process to assign an IFS rating can be broken down as follows. We determine a score for an insurer's industry profile and operating environment, or IPOE. Then we derive scores for the other KRDs, including company profile and financial profile. Next, we combine the scores to derive the implied IFS. Finally, we consider if any analytical adjustments are required to arrive at the adjusted IFS rating. The IFS we assign will also consider ownership and, if applicable, transfer and convertibility risk. To derive the IPOE range for an insurance market, Fitch analyzes an insurer's implied operating environment, or OE, which captures Fitch's assessment of the ability of insurers in a particular jurisdiction to generate business volumes while taking on acceptable levels of risk. The implied OE score is a function of two core metrics, GDP per capita and BMI's operational risk index. The implied OE score can then be adjusted to arrive at the assigned 6-notch IPOE range. The IPOE can be high in some developed markets or low in some emerging market jurisdictions. For consideration of how IPOEs are assigned for entities that operate in multiple jurisdictions, please refer to the criteria report. The main qualitative KRD is the company profile. The company profile combines an insurer's business profile and its corporate governance. Business profile is assessed by analyzing an insurer's competitive position, diversification, business risk, and time in business. Business profile is evaluated via a ranking system that is conducted on a relative basis within the cohort of insurers defined by the selected IPOE, including insurers both rated and unrated by Fitch. Corporate governance is ranked on a relative basis within the cohort of insurers defined by the IPOE. The corporate governance assessment can have a neutral or negative impact on the company profile assessment. The analysis of the quantitative KRDs is based on a series of financial ratios and metrics. In addition, analysts can apply certain qualitative considerations. Financial ratios and metrics defined within the criteria are identified as either core or complementary ratios, with core metrics typically receiving higher emphasis, unless, under special circumstances, a complementary metric better reflects the fundamentals than a core metric. Only select core ratios are shown here. Though the scoring of KRDs relies heavily on the review of historical financial information, Fitch's analysis is forward-looking and may also employ forecasting and stress testing techniques. Once all key rating drivers are scored, the implied IFS rating will be calculated. The KRDs are weighted as shown in the slide to determine an implied IFS rating. The IPOE is not itself weighted because it is already used to help determine the company profile score, and it also provides a backdrop for our broader analysis. The weighting of financial profile elements is sector-dependent. For the life sector, a weighting of 10% is given to the asset or liability and liquidity management KRD. For non-life, we allocate a 5% weight to the reserve adequacy KRD and a 5% weight to the reinsurance, risk mitigation, and catastrophe risk KRD. Fitch then considers whether the implied IFS rating should be adjusted to arrive at the adjusted IFS rating. There are three possible reasons. First, the company profile KRD may have a stronger impact on the IFS than the weighting would suggest. This is appropriate in cases where we believe that this KRD over the long term will have a positive or negative impact on an insurer's financial metrics beyond that currently captured in the financial KRD scores. Second, we may assign the IFS at a level lower than the implied IFS when one or more financial KRDs represent an insurer's weakest link, in particular at low rating levels. The weakest link KRD or KRDs has or have a strong impact on our overall view of the insurer's credit profile and lower the assigned IFS to or closer to the level of the weakest link KRD score or scores. Finally, we may adjust the IFS rating downwards below the implied IFS where we believe the implied IFS is too high relative to the IPOE score or to the domestic or relevant sovereign risk. This completes the first video. In the second video, we will describe how Fitch assigns issuer default ratings, as well as ratings to debt and hybrid instruments issued by insurance and reinsurance companies. Should you have any questions, please find a list of contacts on fitchratings.com/insurance.